The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and of course, we got that all resolved. Got a new monitor, number 3 went down, and it affected the way that the speakers were and the microphones. So we're all set. Here we go. Dow's up 28 at 21,437. S&P's up 2427, up 0.22. The comp index is up 17 at 61.93. The VIX index is down at 10.85, down 25 cents. This is going to be very interesting. The E-mini is up 1. Now look at this, lower lows and lower highs, and then you had that sharp move down to the 2402 level in the September E-mini, and now you've got a rectangle formation. And what do we say? Rectangle formation can last a lot longer than your patience. So I think we just chopping around until we break under 2402. Or spike above 24.37, somewhere around there. And we're at 24.25 right now. So chop range, slightly lower lows, slightly lower highs. That's the way we're looking at it. Most importantly is that weekly arch. See, what I said to subscribers this morning, we're making an arch in the 120-minute chart, although there's a chance that we could have a bit of a bounce. Not much, but a bit. And the daily chart, you see this arch formation here. See the way the MACD and stochastic have been very poor, yet with very pure technicals. If the price holds up, that's a good sign. The weekly chart is making an arch formation, but really, until the 2400 support goes, this is just sideways action. So now let's continue with the numbers. QQQ, the NDX 100, nice bounce, gone from the 135s, it's trading at 139. At this particular point, up 36 in a gray leg A. I've got it as a 4 to the upside in the Chapman wave. We're expecting a Chapman wave 5 slide below 135.50 at some point over the next week or two. The weekly chart is in a sell signal. The daily is sell mode. Weekly is in a sell signal. I kind of think of it as a sell mode at this particular point because it closed under the 9-period moving average 4 out of the last 5 weeks. And that's usually not a good sign. And the MACD is turning down, stochastic's turning down. So, yeah, let's call it a sell mode. I've got the down arrow already in place. So now what we want to do is look at the IWM. So the question I had about the IWM here was, where did it go? IWM. Did I lose that question? Over there. All right, I'll find it. There was a question about the IWM. It was holding well in a sideways consolidation. That's really my contention has been it has made a daily sell mode. It has made at least a signal that says technically the sell signal is in place. But I've been saying that the IWM, the Russell 2000, is still trading sideways until it breaks 138. It's at 140.35, up 46 cents right now. Until it breaks that support, that's a problem. I just needed to show you this. Here's the 2-minute chart made a double top at peak F. I think it could be pulling back. I'm not sure if it's that deep a pullback at 24.25. If it goes to 24.27 at any point in the next hour, that's going to be very good action just intraday. And if it slides under 24.23, it's going to say, nah, most of the gains have been made, and now it's just chop around. Let me just show you something else. The ESU 7, that's the September contract in the 120-minute chart made a peak E at 2430, a round number high. It's pulled back. It's still just choppy in the sideways move, but the technicals are really not that good. So I'm expecting that rallies are going to fail, and we'll go to lower lows and lower highs. Paul wanted to know about Walmart. Let me just do that now. I want to get a whole chunk down because there's so much to talk about. What was the question? Paul wanted to know, hey, can you take a look at Walmart on the show today? I know you were sour on this before, but you have to admit Walmart and Amazon are truly taking over the world. Well, Walmart did. Now Walmart's in a different area altogether. It's had a very nice rally. It went from from the 90 area back in January 2015 to the 56s in the summer of 2015. Now, and then it hit 80.25, was it? 80.47 on the 5th of June. Pull back sharply to yesterday's low of 73.13, trading right now at 73.90. I think Walmart could have a bit of a bounce, but the way I'm looking at it is that we have to have some kind of a renaissance in the malls and the big supermarket type stores, and Walmart fits in this category of kind of old school, trying to be new school. I think that it's held a lot better than some of the others, but at this particular point, the H pattern says, be careful. It's probably going to have to test the 72s again, where the 200-period exponential moving average is. I'll be impressed if by Thursday it's in trading in the 74.50 or higher area. Email me again, and we'll have another look at it. But I do think that it's just more another H goes to a lowercase m pattern that I'm looking at. That was that question. Let's go on now. I want you to look at gold. Gold is trading weak. It's down 5 at 12.08. That's going to be very important because the weekly chart shows no strength whatsoever. It looks like it wants to tackle the low of the week of the 10th of March at 12.01. If it closes under 1200, it implies that the monthly chart is going to have a tough time. Wow, I wanted to do, there's that double top. Didn't have a chance to put the trade on because I was doing the show. Pity. It just gave all the signals that said, pull back, going to test that 24.21, 24.20 area. Oh, that's the way it goes. Let's go to the 10-minute chart just to show you something else that was very important. It had a strong leg A to the upside, but all it was doing was tackling, this is the E-mini, tackling resistance. It pulled back from that resistance. Yeah, I haven't changed my opinion. We're still short of the Dow. We've got other shorts on. And we do have longs. An interesting long that is working is one of the auto companies. Can you believe it? Doing quite nicely. So gold, not good. Silver, trying to rally. It's a better chart pattern than gold. It's down 4 cents at 15.62. This candle is going to be so important. Long-legged wick going to 15.145 yesterday. At 15.620, I think that silver is suggesting that it's going to try to make a run for the 15.96 area. Actually, no, it's going to make a run for the 15.84 area. If it's able to close over that, that's going to be important. Then it can go to the 9-period moving average. That will help gold. So what was that? That was in gold, GC. Yes, this is a rising falling axe. So it's a rising axe formation. It's where you get two fighting patterns between the arch formation and the rising is actually usually a channel, but it's an expanding channel, and it's under it. Not a good sign for gold at this particular point. Basil Chapman, Tiger, listen to the way I'm hearing all these things, all these cues. Basil Chapman, Tiger Technicians Hour, sounds good, and we're up 2 in the Dow, down 3 in the S&P.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
A question about PPLT. I never remember what it's called. PPLT is the ETFS, physical platinum shares. So that's platinum. Let me just have a look here if I've got my platinum. I got my platinum. PPLT has a nicer chart than a candle today than the actual contract itself, which is 896. So this is what I said to Mike in the den. I said PPLT trading at 85.70, down 54 cents. It's so interesting. Look on the way down. Look at all the green candles, even though it kept going down, down, down. This is a very interesting phenomenon because it means that there are people that are buying this and being very disappointed by the following day's action, and then it closes at the high and they hold the position and they buy again. That makes this candle really important. Why? Because at 85.71, you want to see, based on the 120-minute chart, which is really not an exciting chart right now, other than the stochastic and the MACD, are at a point where if there was just even another 30 cents to the upside, they would turn positive. What's really important is that you need to see a gap tomorrow to the upside, because this is actually the at least a very short-term low. You don't want to see another filler up of the candle as it's done before. You want to see it gap up and stay higher. And that would make 86.28 to 86.32 very important to be hit by Wednesday afternoon, Thursday morning on PPLT. This is one of your better opportunities to attempt a counter trend rally based on the daily, and only Tuesday morning. We're not even an eighth of a day through the week. You really can't tell about this doji candle right now in the weekly, but you want to see this candle close into the body of last week's candle on Friday. So you already want to get to the 86.80 to 87.30 area. That'll be very nice, a nice V-shape action. All right, so that's the PPLT. Now, so GT sends an email that says low ATR, average true range, a low realized volatility / correlated with bull market, ? All the talk this morning, how traders are not trading due to no action, consistent with no real or size sellers. Sideways correction is here like 2013, and GT's mentioned 2013 a number of times. I checked it out. At this point, I'm really not sure. I'm looking at a correlation between 2013, even that early part where there was a bit of a sell-off. So the first year of a president's cycle has been up. 2013, 2009, 2005, have to go back to 2001 to get down here. So what I love about statistics, I once drew this cartoon. I had this cartoon series, financial stock market cartoon series, and I drew this cartoon that there was this husband and wife, and he's looking at the newspapers in the days where you read in the newspaper where your stock closed the day before, and he's looking and he says, 9-1 up. He says, that's fantastic. My stock must have done really well. And he goes and he looks and he says, down, 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 down. No. He says, up, up, up. It was 9-1 up. That's right. He says, up, 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 yep, up, up, up. Gets to 8 and he looks at 9 and he says, down. Oh, that's how they get the statistics. Yeah, you have to be the one. That's all it is. So we'll see about statistics. The way I'm looking at it, I'm not sure about the year because my monthly charts are still very bullish. But looking at the shorter term, I think chop, 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 lower highs, lower lows. That's what we're looking at. At least that's the posture. So let's just have a quick look here. Oh, look at that. Broke the support, broke under that 24, 22 support, down again. Okay. So we're looking at a situation that says that you've got to now look at the dollar, DXY. The dollar is only down a penny, but it is just stuck in this lower part of the range. Weekly chart looks horrible. Flat stochastic, that's not good. Flat 120-minute chart, that's not good. Let's see if gold is having an opportunity here, taking the opportunity to rally. Now it's down 3.90. Now, you see, there's that candle that we're looking at in PPLT. That's the platinum. And you don't want to see this filler. You want to see a nice candle, long-legged doji, and then a gap to the upside. It makes a beautiful V-shape turnaround with the kind of candle, at least that I like. Now, they have all different names. I like to call it just a long-legged candle. It's really like a long-legged doji candle. In this case, it's more like a hammer because the price opens and closes near the top. But most importantly, I love to see remember, a candle means nothing until the following candle. And that's really important. You want to know that there's a particular kind of candle that you look for. And then you want a follow-up because it's the follow-up candle that's most important, not the candle that's just been formed. All right, so now we've got the dollar. We look at the EUR, USD. I was asked about the XLF. We'll get there. The euro dollar, euro is now what I'd said there was a peak D, but the MACD was still good. I couldn't put a down arrow. It held the 9-period moving average. I couldn't put a down arrow. And the stochastic was pulling back, but still above 80% at 86%. So I said, I'm not going to put in a down arrow. So I still haven't put it in. And now what I'm anticipating is that we're going to see a test of the highs of the 29th of June and the 30th of June at 1.1445. That's going to be very important because the weekly chart has already made a peak E, even though it's just a fractional lower high last week. And if it takes it out and the euro can go to 1.14, I'd put it at 1.147-ish, 750. If it can get anywhere around that area, then that 200-period moving average for the first time becomes a magnet. Let me show you something about techniques. This is a technique that you should try to keep in mind. A particular moving average only has importance when it becomes a focal point. And it's not a focal all the time. Who cared about the 200-period moving average? Once the euro-dollar currency pair broke down, the 22nd of August of 2014, it was done. It never got even close. But now it's starting to get closer and closer. And that says to me that the 1.160 200-period exponential moving average is going to become a magnet, but only it needs to go a little higher, maybe into the 1.52. It just needs to go higher. And then I think it gets close to being a magnet. And what's really important, remember we spoke about this, I would even think it was nearly a year ago. I said what's important about this particular pattern is that the lowercase h, and I drew it in, goes to a lowercase m, And if that lowercase m takes out on the right, the left side low, and then closes above, if the technicals are starting to build strength, you can see a price to the next left side higher moving average or peak. That was that peak of November of 2016 at 1.129, or you could go even higher. So we've gone above that one. So where is it going? To the next level, the May high of 1.161 is a possibility. Although this is all leg A and it started a low. Wow. January of 2015 has taken 1, 2, 3, 4, 5, 6. This is the 7th month. So we'll see if it makes a new high this week. A new recovery high, that is. Now, Dow's down 125. Whoa, look at that. I'll be back. XLF getting dinged. Yes, we're going to look at the XLF right next.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
John Logan has been hard at work making the TAS Profile Scanner Plus the best it can be, and he'll be hosting a special hour-long webinar for all TAS Profile Scanner Plus subscribers this Wednesday, July 12th from 5 till 6 p.m. Eastern. Right now, you can get a 30-day free trial to this amazing piece of software. See for yourself how it tracks 5,000 financial instruments in real time, over 17 different stock exchanges, U.S. futures, and currencies. This piece of software will change the way you trade, and it can be used with any trading methodology. The combination of price and volume is what makes market profile-based analysis so unique. We've opened up a 30-day free trial to the TAS Profile Scanner Plus, even if you've had a trial before, so now is a great time to sign up. You also gain access to John's July 12th webinar, How Price, Volume, and Time Make Market Profile Unique. Sign up for your free trial to the TAS Profile Scanner Plus right now on the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So the VIX has just jumped to 11.82. It's up 71 cents. Remember, above 1132, it's above the 9-period moving average. The MACD is strong. The stochastic's very weak at 33%. However, this is an emotional trading vehicle. Well, it's an emotional trading vehicle for those who traded, but the vehicle itself is one based on fear and greed. I don't actually like those terms. I call it buying pressure and selling pressure. But when it starts to scream into the teens, there you're starting to see the action that I would agree with, calling it fear and greed. So what we're looking at here is, let me just get it right here. Yes. So what we're looking at in terms of the, this is what I wanted to show beforehand, and I never did. I wanted to show how the resistance, how drawing trend lines, see, maybe I should do a workshop one of these days, just showing how to draw trend lines and how important they are, and just maybe one or two or three techniques, and we just do them over and over and over for those of you who really like to chart. I'll think about that, because it was mentioned to me the other day that it's something I might want to consider. I will consider it. But in the meantime, back at the range, look, I drew this in for my subscribers. I said, this trend line resistance, Chapman wave falling axe formation, is very important. There's another pattern, and I wasn't sure it was going to work. Funny about that. But the reason why we stayed short the Dow, even though most commentators that I'd heard over any little bit of news that I heard over the last few days was pointing to the market holding very well and about to push to the upside, I drew this pattern in, and I said it's a pattern that is very rare. I've looked at it for years. There's a whole thesis that goes with it. It's called the diamond formation. And if it was the DIA diamonds, which this is the Dow, I could have done it with the diamonds. It would have been amazing to have the diamonds make a diamond position and then break the way you talk about it in the diamond pattern. My big problem with the diamond pattern is that it doesn't have the veracity that my Chapman wave stalk leg formation does. Look at the body. Look at this. Here's a good one, the Dow, INDU. Look, there's that stalk leg formation and the implications of the neck. This doesn't have that. This is absolutely a diamond. It looks like a diamond. It has the resistance. It has the support. Then it comes down. It has the resistance. Then it has the support. It smashed through the support just now. So what I said to subscribers to my opening call, I said, we'll watch this closely, because it's the reaction, and I'm watching to see, and there it is. So this is what I showed. This is for my subscribers to my opening call. Every day is a huge chunk of charts that go out. And I showed this is the Dow 120-minute chart. This is the left side with no MACD and stochastic. This is with the MACD and stochastic. And what I said is, if there is a break, then what we could see is an arch, the second arch formation, as the MACD deflects lower and the stochastic, which really rallied but is not very strong at this particular point, starts to pull back sharply. I also showed every day I show this is the daily, the weekly, and the 120-minute chart of the E-mini. And I said, look at the arch formation. This is very weak action. Look at the arch formation in the day. Look at the arch formation in the weekly. So I do this every single day, plus my Traders Corner, etc. Now, this is going to be very interesting. Why? Because any rebound, I don't know what the news is, whatever the news is, it was very sudden, very quick. So now there should be a rebound. No. It's that same old thing. Look at every one of those big red candles. It was followed by a nice green candle, the big spike to the upside. Hey, every big spike to the upside was followed with red candles. So this is a chop, chop, chop area, but we've made lower lows. We've gone to a low, a leg D, finally, in the 120-minute chart, with the MACD still weak and the stochastic still weak. I suggest this is going to fail at some point, and then we're going to hit this 21,200, 200-period exponential moving average at some point. But what was most important about the daily chart is what I said is we are getting closer over here. We're getting closer and closer to making the red, the 20-period exponential moving average, an area of a magnet area and then a resistance area. So 21,347, watch that area. That could start to become resistance with a 9-period exponential moving average of 21,381. Very, very strong resistance. This is going to be now an arch formation, I believe, and you can see it in this particular pattern here where the MACD expanded even more. Stochastic tried to rally, and it hasn't yet succeeded in doing that. So what I'd said to subscribers, so far it's not bear market material. This move that we just saw is the second to third characteristic of what I'd be looking for for a bear phase to begin, but not until we close into 21,197 will you see the weekly chart even begin to display that kind of negative action. Okay, so the next question was AXP. Let's go over here. AXP, that's American Express. American Express has made a peak F. I almost put it in as a short this morning. So the question is, Sarah wants to know, AXP, American Express, take short. I would say, based on the weekly chart, being still strong technically, 120, and the monthly chart still only in leg C. The 120-minute chart is suggesting that there could be some kind of a pullback. Let's keep it in mind that it's in a sell signal. I haven't got a sell mode until it closes way below 83, 81, the 9-period moving average, where it is right now. So I'm going to hold off there saying absolutely it's on the list. But let me go through the next one, SYF, another financial, I believe. Peak F top at 30.50 area, trading at 28.97. This is a much better one because the weekly chart is starting to fail. So 28.97. Would I put a short in? I would start a small short at this particular point. Why? Because it's going to test the left side low of 28.84, and the low so far today is 28.80. So it hasn't taken it out. If it takes it out, then I'd be more comfortable with it. But yes, it's in a sell mode in the daily. It's already in a sell mode in the weekly. This is just a counter trend rally. And COF, which is Capital One used to have these crazy commercials. Now you've got some other ones like, is that the Hartford? What is the one the guy says, we've been there, we've done that, or whatever it is. They have some very funny ones, especially the one with the couple in the sports with the sunroof open, looking at the ocean. Reminds me of I used to always, as a kid, my parents used to take me back in Cape Town, South Africa. On Sunday afternoon, we'd go and sit on this very steep slope going down to this really rocky area, spectacular waves, and we'd just sit there watching for an hour and a half, just looking at the waves. Didn't have any sunroof open. But yeah, that would have been funny. So here we go. COF is, they're not having the best commercials, and you can see it here in the chart. This could be a G/B, but I'm looking at it and I'm thinking that Capital One, trading at 81.11, down 94 cents, is giving me a very close to a sell mode in the daily. It's already in a sell mode in the weekly. So, yeah, these are not looking very good. So the question was, did I do the XLF? No, I must come back to the XLF. I was asked about it twice, and twice I forgot to do it. So Dow's down 85, S&P's down 8.20. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active objective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
So we're looking at this little rebound in the E-mini, went all the way down to the 2410 area, and then it bounces 2418, trading at 2416 right now. I don't know what the news is. Doesn't matter what the news is. This chart pattern is saying that we should continue to see slightly lower highs and slightly lower lows at first, and then it'll start to accelerate, but not until we really break the 21,100 support, and we're not even close to that yet. The TLT is up 16 cents at 123.06. What I did want to say is that if the banks don't actually rally now, I'm going to be having a deeper look at gold. The XLF having a sharp down day, down 21 cents at 24.81. Down 0.84%. I'm looking at this. We do have a particular potential buy in this, way lower down. I'll keep it just for now, but I'm beginning to think that the double top, we just saw, you see this double top pattern at 25.30 back in March, the third week of 2017, pulls back, then it makes a little H pattern, successful H pattern at 22.89. It rallies up in April to where we saw last week, 24.19. Didn't take out that high. And now, look, the MACD has a chance to deflect. Oh, stochastic's only at 79%, not 80%. So I need to watch this really closely. And that means that I have to look at the TNX very, very intensely to see how this pullback, is this like a single leg A up? What is going to happen? That's really the question. Is this the start of a much bigger move? It's just B, and now we're going to go like the TBT, making a peak B, and peak C. No, it's a peak B. I was corrected on that. This is a B right there. Making a peak B, getting ready to go to higher highs, test the 37.53 level in the 200-period moving average. It's now 36.95, only down 11 cents. So this is going to be very important. Why? Because we've already begun to see that even in the sectors that have pulled back sharply, there are buyers that keep coming in wanting to buy the semiconductor index. SMH is trading right now at 84.36. Not a bad candle. That's up 29 cents still, even with that sharp sell. And look at that weekly chart. I think it's going to break that support, but so far it's holding that support. That's going to be very important. And the IBB, weak. It's up 56 cents, but it's under the 9-period moving average at 310.50. So these are kind of key things. So the next question is, Kevin says, it's tough sledding to manage the 3 times short positions when markets in roller coaster mode. Also exposes why a 1-to-1 short play continues to have value, which is kind of what we've got. We've got two ways of doing it. One is we're purely short, and one is we actually have the inverted 1-to-1. And that's allowed us to hold it even when a new high was made. And yeah, I agree 100%. That's why you see me lean a little bit more to the 1-to-1s. Hopefully another slide soon, Kevin. boom, we just got that slide. But look how quickly the market's trying to rally again. And that's really the big issue. Bob wants to know about, first of all, KRE. Let me go to KRE because that's one that we do have. It's at 55.26. And we're still up on this. It's kind of holding okay. This is this SPY S&P Regional Bank. I would not be surprised if the XLF had a better move. Now the KRE is going to have an easier consolidation if there is one. I'm not sure if we'll keep the position, but we'll try to keep the position. But it might start to rally before the XLF because it's regional, and they should benefit very quickly if the rates are going to impact everything that they do. So that's the KRE trading 55.26 down just 13 cents. Yeah, so it's holding well. I like the way it's holding at this point. Julie wants to know about is that BRS? Let me just quickly go there. BRS. I don't think I've looked at BRS for a while. No, I've never looked at it. Brewster. Yeah, this is the pattern. It has the potential to be a really big winner with the H pattern, but you just got to give. I need another day or two. Remind me tomorrow. Remind me Thursday. Let's look at it. No, Thursday. Today, Tuesday. Yeah. Remind me Wednesday and Thursday. I don't want to do anything too early because if it does take out the left side low, that's very negative. That monthly looks horrible. But yeah. And Code in the Den says KRE never got out of the sideways action. Let's see. AVH is the next one I want to look at. Avianca Airlines. I've never looked at this. What a nice move to the upside. What the heck is Avianca? Aviance Holding. Oh, Aviance Holding, not an airline. Aviance Holding. Yes, it's very good action. Now, is the question, should I buy? It depends who you are, and it depends on what your trading style is. For the person who's asking about this, I know that you've got a much longer time frame. It's trading at $7.15. It's up. It's down 6 cents after a spectacular 2 days, going from the 640s to the 720s. I'm going to suggest to you have a little patience. In your style, I would just nibble here, 10 shares. I don't even know what it is, 5 shares. Just get a feel for it so it's on your list, and you can tell how it acts and reacts intraday. That's really what I want you to do. It has the look of a single leg A to the upside, but the weekly chart is finally improving, and the stochastic is at 24%, which is okay. The monthly chart is making higher highs and higher lows. At this point, yes, start a position. I'm going to put it down here. I've got enough paper to put it down. Oh, my. So I'll have to put it over here, AVH. Send me an email on that because I'm liable to forget. Okay. Yes. So start a little position here. I'll talk about it more in 2-3 days time. Okay. This is a little early, but I do like that potential for the pattern. ESV OIH. OIH right now trading at up 30 cents. Now, it keeps showing the signs that it wants to rally and then it fails. When you see a weekly chart that just makes a channel, down channel, with persistent lower lows and lower highs, lower lows and lower highs, there's a move that suddenly occurs that takes out 3 to 10 left side bars. If it was to do that, it would scream from 24.62 right into the 27.28 level on the weekly chart. What it does to the daily, it's the same sort of thing. So I'm just going to say that I like the technical action of ORH, the Market Vectors Oil Service ETF, but I'm going to suggest I need another day. If tomorrow is up, I'm going to say, yes, I like that action. You could start a position because it went under and then closed above the left side low, had a positive follow through yesterday, and today's now tackling the 9-period moving average, but it's done this before, even with the technicals improving. So here's my suggestion. 24.60, what is the wave cut? A short? Oh, is that a short? No. At this particular point, I can just say to you that I would not be shorting. Yeah, I think the reward, yeah, it's about 10%, 2 points. But the risk is that before it even does that, it could bounce 5%. So, my guess is that the 5% rule is going to be more favorable than the 10% right now. No, you could be 100% correct about shorting it, but after a year. What is it? No, it's not a year. December. So after 6 months, 7 months of every week not closing above the 9-period moving average, you got to anticipate it's getting real close. And that long candle with 2 outside wicks from last week suggests to me there's a chance that 25.51, the 9-period moving average, could be hit in the next week or two. So keep your eye on. If you want it, I would buy an option call, the 25 call right now, and that's the only way I'd play. That's a better way to play it. All right, we'll be back. Dow's down 50. Nice comeback. S&P's down 6.5. Wow, this is the Energizer Bunny.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Wow, what a remarkable market. Now we're only down 24. Only down 5. Look, this is the gold 10-minute chart. What a spike from the 12.08 area, zap, 12.07 area, boom, all the way to 12.16. That's a big move, 9 points. And now it's back down. So if gold closes down today after that, whatever it was that made the news, that's really not good action. If it closes near the highs, that's going to be good action. I'm watching the commodities closely. Now, down 13, down only 4 points in the S&P. So remember what we were looking at? I said, I don't trust this pattern. I don't like it. I've watched it for years, and it hardly ever works out. And that is the diamond pattern. And there was a whole thing. I mean, I didn't even bother to go to it. I'm sure if you Google diamond pattern, diamond formation or diamond pattern in technicals, the technical directory for the stock market, you'll see terrible things about the way it crashes and it goes all the way below the low on the left side. In this case, it would be 21,196. Well, what I said is, I don't know. I've hardly ever seen it work, but I put it in, and there it is. it bounces, it spikes all the way down to the 21,000. I missed that point. I forgot to type it in. 21,279 area, and now we're trading at 21,396. I mean, is that credible action? That is incredible action. So this is the Energizer Bunny market. Just don't be too clever. Be careful. We have longs, we have shorts. You know, one of our longs is doing very nicely. We just missed by a couple of pennies. Another one on the long side. I just have to check here. Another one's up, but is pulled back from our entry point. I've got a mixed thing. Oh, Tim. Sorry, no, it wasn't Tim. It was JL. You sent me a note saying, "Hi Basil, in your Traders Corner there was a reference to a chart in your comments on GDX. Where do I locate this chart?" What happened was, I went. I've got my 20 bullet points of either stocks we own or are looking to buy, or ETFs, or the TLT giving parameters, etc. But in my one under the GDX, it's number 6. What happened is I was typing it for number 7, and then I thought, all right, I'll just add these comments to number 7. All those comments refer to number 7, also beginning with a G, the letter G. So it wasn't GDX. It was for the next one under G. I typed it in and forgot to read it. I mean, I did read it, but I forgot that I skipped the line. So that GDX really refers to number 7. So that's the one with the chart. Now, tomorrow I probably will have a GDX chart because I think it's just starting to become interesting right now. I don't know if we'll have a position yet, but I'm going to consider what do I do about the gold and the gold area in this particular market right now. Okay, so we are very close to wrapping up. Let me just make it real simple. Remember we were talking about the VIX index, spoke about the diamonds in that diamond position. Now look at the VIX under the 1120s at 1120, right on the 9-period moving average. It almost got to the 1230 200-period moving average. We can't mess around. This is a mixed market. It's a high-level consolidation. It is a rotational consolidation. Be very focused on areas that are weak. Be very focused on areas that are strong. And then you have to try to find a balance between that. And even when it's working, it might not. And that's why Kevin had a very good point. If you're using the 3-to-1 short positions, even the long, but I'm saying with the short positions, it's better to have a bigger 1-to-1. It's just a better, for some reason, it just gives you a better feeling, even though the percentages should be about the same. They're not. It's just harder to manage the trade. So, okay, keep it simple. The Dow's down 12, S&P's down 5. I wouldn't be surprised if there's another sell-off a little later on. But in the meantime, watch the VIX. VIX starts to push into the 1155, 1162 area. You will start to see the selling come back. If it goes down to 1110 or lower, you'll see some buying come in. I think that most of the work's done since it's a very quiet, slightly down market by the end of the day. Have a wonderful day. I'll be back. I believe I'll be back with Tom a little later on. Otherwise, I'll see you tomorrow. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.